Hello, everyone. I'm Meher Walia, and welcome to Finding Finance, the podcast where we delve into the different subfields of finance. This podcast aims to help high schoolers who are contemplating a career in finance understand the different paths in the world of finance and help them find which path interests them the most. Our esteemed guest today is Stephen Witthuhn. He's the Chief Operating Officer for Finance and Strategy at BlackRock. Mr. Witthuhn has been at BlackRock since 2012, prior to which he was an engagement manager at McKinsey from 2008 to 2012. BlackRock is an American multinational investment company. They are one of the world's leading providers of investment, advisory, and risk management solutions. I hope you enjoy our conversation with Mr. Witthuhn. Mr. Witthuhn, thank you for joining us today. It is a pleasure to have you on the show.
Thank you for having me.
Let's start at the very beginning. Take me all the way back to your upbringing. Where did you grow up? What were your favorite subjects in school? What were your hobbies?
Sure. So again, thanks for having me. I grew up about 5 minutes from where we are right now and where I live on Long Island in Syosset. I had a lot of favorite subjects in school. I was a little bit of a nerd that way, and I mean that in a very endearing sense, I think. My favorite was probably math. I loved math. I loved the rules of math. And I've found that it's something I've used throughout my career as well. I also love Latin. I think that's a good lesson that I actually didn't find the subject of Latin that interesting, but I had a great, quirky, very interesting teacher. And so just a lesson that, to some extent, no matter the material, having a great teacher or a great mentor can make anything sort of interesting. So those were probably my two favorites. Hobbies, I grew up with three younger brothers and a younger sister, but the three brothers and I were very close in age, all 6 years apart end to end. So a lot of good 2-on-2 sports. As the oldest, I was the best for a while and have since been surpassed, but I did have those glory days back then.
Any specific sports you love to play?
Any and all. Growing up, played a lot of baseball, a lot of tennis, a lot of 2-on-2 basketball in the driveway. It's sort of been reduced down to golf and squash at this point. Basketball will probably break me if I tried to play it now, but we would play pretty much anything growing up.
Oh, that's lovely. I play squash too. It's a great game.
Great. You'd probably beat me, but I try.
That's true. Great. You have a very impressive resume, graduating from Yale and majoring in economics. Do you recommend majoring in economics for students who want to pursue finance?
Sure. I think it's a great major. It certainly did well by me. If you're interested in business, if you're interested in the way that the economy works, obviously economics is a great major. I think it's far from the only major that's relevant for finance. I would say, especially in this day and age, there's a lot of technical majors that make sense as well, some of which actually probably weren't even available when I was in college. But you think about things like more quantitative math majors, computer science. There's even majors that focus on AI, prompt engineering, I think now, more sort of technical finance majors. And those, I think, lend themselves to more technical-oriented careers in finance. But there's a lot of people, a lot of very successful people that I work with that have done well in the industry with much more of a humanities major, arts, language, literature, philosophy. So really, there's not just one path. I think my point would be pursue what you love. For me, I really enjoyed the discipline of economics, blending both sort of the math and finance side of it with more of the global macroeconomic element of it. That's what I loved, but there's plenty of ways to get into the finance world regardless of what you do in college.
Wow, that's great, having that, different subjects you can merge together. Are these some of the subjects you're seeing in current graduates majoring that want to go into finance?
Yeah, I do think it's a mix. I'm not in a particularly technical part of the finance world, as we'll talk about, I'm sure, in a little bit. And so I've seen all sorts of majors, graduates with all sorts of majors be very successful. One of the most talented people I worked with from early on, who's now a very successful director, probably soon to be managing director at BlackRock, was an art history major. That's what she loved in college. She thought she would then go on to med school actually with that. Which you wouldn't think that would even qualify you for med school either, ended up finding her way to BlackRock and found herself incredibly successful. And I think the lesson there is this was somebody who just followed what she was passionate about, was very interesting to talk to, a lot of interesting things to say. And then when you get out into the working world, yeah, there's some sort of technical things you need to learn for your job. But really, can you influence people, carry on a conversation with people, talk about things that help you find them interesting? That's how you ultimately influence people in the business world. And that can come from a lot of different majors. Now, I wouldn't have her run like highly technical derivatives models, right? That's not what she does. But for most of the finance world, I think she can be very successful.
Wow, that's interesting how pursuing art history as a major led her into finance, even the switch from medicine. Speaking about different majors, after graduating from Yale, you entered Harvard Law School. What was your thought process behind going to law school? Is that common for people wanting to go into finance? And how has that helped you today?
Yeah, to the extent that there was a thought process behind it, I think I just wasn't ready to commit to anything quite yet. I was enjoying being in school. After 19 years or whatever it was, I was ready for a bit more. I had a bunch of lawyers in the family, most of whom really enjoyed what they did. So I saw that as a great career option that was engaging people that were surrounding me. And, I did think enough that I did want to be a lawyer. It wasn't just totally random that I went to law school, but I was also just eager to continue my education and do something that I thought would help point me down a path to law, but also keep other options open as well. I knew going in that, for example, a lot of law students went to consulting, which I'm sure we'll talk about in a second. And so that's what I found. Now, by the time I was done with law school, I was sick of school, and so I was ready to go work. But at the time I entered, I was ready to just study one more thing. In terms of is it common, I actually do think it's quite common. I see a lot of very successful people in my line of work who have legal backgrounds and law degrees. My current boss, my mentor, and several of the other senior execs at BlackRock have that. I think the way you think in terms of understanding precedent and applying it to the circumstances of a new problem or an analogous problem, and then trying to convince a group, whether it's a group of clients or a group of colleagues, to take action based on your application of experience to the facts of that situation. That's what you learn in law school. I think that's actually quite relevant in a lot of lines of work, including finance. Certainly, if you're doing deals, a lot of the technical knowledge you get in corporate law as a law student, or even starting out as a lawyer, is very relevant to doing deals, structuring deals. And so if you get into that element of finance, I do think that you find a lot of ex-law students or ex-lawyers there.
That's great. So many different subjects can help you with finance. So after Harvard Law School, you started out at McKinsey & Company. What did you learn during your time at McKinsey, and how did that stint help you later in your career?
Sure. So I think the very literal answer is I spent most of my time in McKinsey working in asset management, which is the field I ended up going into and now continue to work in. So the first thing I found at McKinsey is the career that I wanted to be in, or the field that I wanted to be in going forward. I would say more broadly, though, that the big lesson there was prior to consulting, I had spent my entire life, career, quote unquote, in school. Went to lower school, middle school, high school, college, law school. And there, you have a very clear incentive system, right? You work hard and you try to get the best grades possible. In many cases, you're doing things like math, elements of history, where you're doing tests, you're applying knowledge, and you're taking tests that have sort of a right answer or a wrong answer. And you get sort of a very extrinsic grade at the end of it. But in the real world, there's actually, especially in the business world, there's very few problems that have a right answer or a wrong answer. Should we do this deal? Should we hire this person? Should we pursue this strategy or not? There's not a yes or no answer to that. There's a lot of different paths that one could take. And what's important is not just doing the analysis and doing the research and work to substantiate your recommendation, but really convincing people of that recommendation and then rallying them, galvanizing them to go take action. And that's really what I learned as a consultant. I struggled a lot early on as a very analytical person with trying to build models for whatever we were doing, to model out a part of the industry or a projected growth plan for a company, et cetera. And there was never perfect information, and I struggled with that. But what I learned there was take the best available information, look at it from multiple angles, and ultimately decide on a recommendation and try to convince people, clients, partners, et cetera, of that recommendation. That's what you do in the business world, in the finance world, and that's what I really learned at McKinsey from when I started, being used to sort of trying to get the right answer, quote unquote, each time to the end after I left there. And that served me really well as I took that into my sort of full career.
Would you recommend for students to become consultants right out of college if they want to pursue asset management or a similar field?
I think it was a great start to my career. Plenty of people have plenty of great careers not going to consulting. Mm-hmm. I certainly wouldn't say not to do it, but there's a lot of paths out there. Hopefully, one thing that people take away from this and the various other guests that you talk to is there's not one right path. You got to pursue things that seem right to you or intellectually interesting to you, build good experiences, and then you take that, learn from that, and you apply it to your next thing. So certainly consulting was a great start to my career for me. It is for many others, but it's not a prerequisite by any means either.
It's great to hear. What about asset management itself? What is asset management?
Sure. So asset management, to try to put it simply, we invest clients' money on their behalf to try to help them grow their assets, subject to how they want their assets to be managed. So we don't decide unilaterally how clients' money gets invested. We offer them options, different asset classes, different geographical exposures, public companies, private companies, et cetera. Try to offer them choice, but subject to that choice and help make recommendations as to how they might think about putting different exposures together. Try to invest that money as best as possible on their behalf, such that we do better as a company only if they do better. We don't take bets against them. We don't make money by sort of churning their assets. We're trying to help grow their book, their portfolio, subject to what they want us to do for them. And then within that, there's a lot of different things from a career standpoint that you can do. Certainly, we have some people that are investing money, that are choosing certain stocks to invest in or bonds to invest in or the like. We've got people that are in client service. That's sort of the second bucket, that are working with clients to help recommend certain products, help them think through choosing one product or one exposure versus another. And there's various flavors of that. And there's a third flavor that is sort of the operational side, running the business, operations, finance, strategy, talent management, et cetera. All these things sort of go into running an asset management business, but at its heart, what asset management is managing the assets of our clients, whether they be individual clients or whether they be large institutions like a pension fund or a bank, et cetera, and try to do as best for them, subject to their choice as we can.
So I have a question about asset management. The investments you make on behalf of your clients, are they usually short-term, long-term, or do they vary by your client?
It varies. We generally try to encourage clients to think about investing for the long term, sticking through market cycles, having sort of a target portfolio or target allocation that they're managing to, that periodically you sort of rebalance back to. But generally, we find sort of a long-term approach helps. We tell clients it's not about timing the market, right? Trying to time when to get in and get out. It's about time in the market, right? Exposure to capital markets, which grow over time, is a good thing. Certainly for all sorts of reasons, different clients might have shorter term exposures. They might need certain of their investments to be very liquid or available in cash over a short-term basis. And we try to navigate all that and offer investments that are more short-term versus long-term in nature. But ultimately, we do try to recommend that clients think about the long-term goals that they're investing for.
What made you want to go into this field? Was there anyone who inspired you to do this?
I think the biggest thing is, I built some experience at McKinsey in the asset management space, working with some colleagues and partners there that I really enjoyed working with, and that I was eager to sort of re-up with when I was at McKinsey. And so I started to build a base of knowledge there. But really, it's more about the mission of the industry. And whether we're managing a fund or a portfolio for an individual investor through their financial advisor, or whether we're managing money for a pension fund or an insurance company, or an institutional client like that, at the end of the day, we're trying to grow that base of investments for some individual investor that's at the end of that to have a better financial future or sort of grow their wealth. And that's a pretty clear, easy message to get behind. And I do like the mission of that. It's simple, clear, and ultimately filters down to building better financial futures for individual investors. So that's it above all. Beyond that, a lot of numbers. I still love numbers. I love math. I've found that I've really enjoyed the people that I've worked with in the industry. I've only worked at BlackRock post McKinsey. So that's part of it as well. But the mission for me was very clear to get behind.
So as you said, you transitioned to BlackRock after McKinsey and you moved up the ladder. Could you talk a bit about the roles you've played and what does your typical day now entail?
Sure. So most of my time, I talked before about the three types of roles at an asset management company. There's clients, there's investing, and there's operations running the business. And I spent most of my time in a client business, but on more of the business management operations strategy side. So I worked in our U.S. wealth business, working with wealth advisors in the U.S. to help them build portfolios, select products, manage money on behalf of their ultimate investors, which were individual client accounts for the most part. I came in from consulting with a strategy consulting background. So I started out as the head of strategy for that business. I then took a role as the COO or chief operating officer of that business, which is sort of responsible for the strategy and the day-to-day operations of that group. And then I shifted a little bit and led a team that was responsible for our products and a lot of our commercial service offerings. We had a consulting business for clients and various technology offerings for clients. So I oversaw the delivery of that. And in the last 2 years, I have served, as you said, as the COO, the Chief Operating Officer for our Global Finance and Strategy Group. So there, I'm not aligned to just one business unit. I operate globally, working with the CFO of the firm. And again, as COO, helping him manage the day-to-day of the group, help set the strategy for the group, and take on various responsibilities around that. But the thing for me is across those roles, yes, I work in asset management. I love the mission of the space. But what I really like is just the hands-on operating of a business day-to-day, thinking about our growth strategy, thinking about where we invest our resources, where we have to change how we're investing our resources, thinking about how we get the right talent around the table, around the business, invest in them, hire great people, train them, have them feel like they're building great careers at the firm, and then just managing a lot of the day-to-day business decisions of the group. That's where I've spent a lot of my time, regardless of what role it has been, product or COO or strategy. I really like the running or the operating of the business. In my case, it just happens to be in the finance space.
So I know the world of finance is filled with success stories. Can you tell me about one of your most exciting business initiatives? And how about one that made you learn a life lesson?
Sure. I've had a lot of highlights. I'll try to pick just one. It is fun to do deals. A lot of the business that we do for clients is investing money on their behalf. But as a company, we often acquire businesses ourselves where we think it'll bring us new capabilities that we don't yet have or help us tap into new markets or the like. And there's an acquisition that I was involved in over the last 4 or 5 years that started out as a small strategic partnership with a small company that did a type of asset management that we didn't do. Great people. It was about a 25, 30 person company. We struck a very good, close relationship sort of personally with the founder of the company and had the chance to strike a partnership with them, sort of a JV, if you will, not technically, but think of it as a JV, joint venture. That took a lot of convincing internally. There was constituencies inside the firm that understandably questioned whether we should be getting into that line of business. We made the case as to why it fit with BlackRock strategy and culture and focus on behalf of clients and delivering more capabilities to clients, and had a great partnership for a few years. And then decided that it was time to try to pursue a full acquisition, to fully buy the company, integrate, and go to market, not just as a joint venture, but as one company. And the mechanics of doing a deal were very interesting, exciting. And throughout, we had a great partnership with the founder of this company, who had started this as sort of a solo practitioner and now was selling his company to the world's largest asset manager. So for him, this was very meaningful. And there were some ups and downs there, but ultimately we got through it in partnership, took a great effort on behalf of the firm, and we completed the acquisition. Now, that's just one of a number of acquisitions that BlackRock has done. It wasn't one of the biggest ones. But for me, it was very meaningful because it was sort of the evolution of a relationship that had started in a smaller context and then sort of grew into this acquisition, and now sort of a set of colleagues that are at the firm permanently. And for me, the lesson there is like, you set strategies, you do deals, you sort of things come up each week, each month, each year. The markets change, but ultimately you work with people, you partner with people, and the business is about people. And this is a story of sort of a great partner who came along the journey with us, and still quite close to. So that was exciting, both from a technical standpoint and also from a partnership standpoint. A life lesson, I'll spare you the details, but there was sort of a pretty big, not that big, a operating issue where some data was exposed outside the firm that wasn't supposed to be. It ultimately was actually pretty limited. But, it was a bit of all hands on deck for a weekend and beyond to try to figure out what had happened. How could we make sure that that information was protected? Ultimately, everything that needed to be protected was protected. But the life lesson there was you treat your client's trust with the utmost seriousness and preciousness, because if you don't have trust from your clients and your business, you have nothing. And very proud of how the firm worked tirelessly to make sure that what we thought might be an issue was actually contained. We were very transparent with clients. We were very transparent internally as to what had happened. Ultimately, everything was fine, but you're only as good as your clients' trust in you, and you really only earn trust through transparency, even in the hardest of times. That to me was a good lesson from a business standpoint. It's easy when it's easy. When it gets hard, be transparent and maintain trust, and work like crazy to do that, and things will be okay.
That's great how everything was resolved in such a clear and effective manner. You did mention joint venture. Do you mind just giving a brief explanation of what joint venture is?
Sure. I mean, there's sort of technical terms to it, but think of it as two companies that are independent going into a line of business together in partnership. So in this case, the company I mentioned before, they were an independent company. We had sort of a shared ownership interest in them after we struck our partnership, but they had their own products. But our team was responsible for helping to introduce those products as part of our broader course of business. So we weren't one company, but we were operating together on a certain line of business. So that's how I would think about joint ventures sort of generally. People smarter than me can give you the more technical term for legal structures around that.
Oh, thank you. So I know the world of finance changes rapidly over time. Where do you see your field 10 years from now, and how will AI have an impact on asset management or finance as a whole?
Sure. So on the one hand, I think and hope nothing will change. Our field exists because clients, institutions, and individuals have complex financial needs for all sorts of reasons. They need and want to grow their wealth, manage their wealth in a risk-aware manner, navigate markets that are increasingly complex. And we exist to help deliver the products and guidance to do that. And I don't think that'll be any different in 10 years or 20 years or 30 years. And so to that extent, I think the mission of the industry sort of endures. On the other hand, I think clearly technology continues to change our industry as every other one year by year. And AI is a part of that. I could give you we could spend an hour and a half just on this topic, but I think one thing I would call out there from a technology and AI standpoint is personalization. So how do we make the investments that our clients are building for their portfolios feel really personalized to their specific needs and their specific preferences? And I was thinking about this in the context of music and Spotify when I was driving home today and thinking about this interview. So if you think about the way that music used to be consumed 15, 20 years ago, you would buy albums on the CD or previously on a tape. Right? You had a lot of choice of albums. They were sort of prepackaged. You took what you get. There was a certain order of songs. Then you moved to sort of unbundle that with MP3s. You'd be able to choose individual songs and put them together. Maybe you'd burn them onto a CD or create a digital playlist. But you could sort of self-select by hand a curation of individual songs. Then AI comes along and puts together smart playlists. So there's a lot of those on Spotify and beyond, where you're not actually choosing the songs individually. The songs are being recommended for you based on your behaviors, listening patterns, certain elements of your demographics. And that's sort of the influence of AI with technology. And then I think the next step of generative AI came when I was listening to the new DJ feature on Spotify, to X. And not only are they recommending a playlist for you or just recommending a stream of songs tailored and curated to you, but there is an AI-generated voice that is talking to you about, we're now going to play you some songs from the late 2010s based on your listening history. And it's the same stream of songs, but it feels like a real DJ and a real human-sounding voice is talking to you and making it feel very relevant and a sort of personalized experience just for you. And I think that'll be the story of our industry as well. We've gone from individually packaged products to being able to build portfolios that are selected individually for the client's needs, to using technology to recommend and personalize those products even more, to ultimately using generative AI to put an experience around, from a technology, commentary, natural language standpoint, around a client's investments that are built just for them. And so same mission, but delivered, I think, in a much more personalized way with a much more personalized experience for clients. I think that's the future, in one way at least, of where our industry is headed.
Yes, like the Spotify example. So retrospectively, would you pursue asset management or finance again? What would you have done differently?
So the easy answer is yes. It's a sort of a philosophical answer, but there's an infinite number of potential paths that my life or anybody's life till now could have taken. And so I'm very happy with where my individual choices and luck and circumstances have led me. And so easy for me to say yes. I enjoy the mission. I enjoy the people that I work with, the firm that I work for, the intellectual challenge that I have, the sort of life I've built around that. So absolutely. Would I have done anything differently? I would tell my younger self I probably could have taken more risks, tried some more things. I worked at two great firms that I've enjoyed. But even within BlackRock, I spent most of my time in one business before moving on. I'm actually readier to take on additional sort of risks now, oddly enough, even though I'm a little bit later in my career. But, it's easy for me to say now. The sort of collection of choices that has led me to this point in an industry that I really love, at a firm that I really love, it's hard to sort of retrospectively question that and go into a whole bunch of hypotheticals. If somebody would have told me 10 years ago that I could have taken some choices and I could have become a professional baseball general manager or a professional golfer, like maybe I would have done that, but I don't think that was ever on offer, unfortunately.
Oh yeah, I would love to do the same, become a professional sports player. On a lighter note, how do you spend your free time now? What are some of your favorite hobbies?
Sure, I do try to keep busy outside of work. First and foremost is my family. I've got two kids, an 11-year-old daughter and a 7-year-old daughter. Great wife, a ton of family around Long Island. Once you're born on Long Island, as you know, you're not allowed to leave. I try to stay active athletically. Like I said, I don't dare play basketball anymore, really, but try to play golf, squash, keep myself competitive, subject to my middle age. I've always been a sort of nerdy fan of crossword puzzles. I play in an annual crossword puzzle tournament each year, competitive crossword puzzle tournament. And I enjoy sort of crossword puzzles, word games, sometimes in the middle of the night when I can't sleep. I try to be philanthropic. I'm active in the board of the school that my kids go to, that I'm an alum of. I feel like that helps give back, but also is an intellectually interesting exercise to engage in a business, and the school is a business in many ways, from a different perspective as a board member, a trustee, as opposed to an operator. So, I do. I've started to try to read more this year. I've read 9 books this year, which is probably more than I've read in the last 5 years combined. So I'm trying to replace some TV with reading. I get bored easily, and so I don't generally like having an idle mind. And so I try to sort of keep those 3 legs of the stool of my life: professional, personal, and then family, all active and all in balance.
I love that, how it's balanced and mixed at the same time. I also love puzzles too.
Okay.
You do the Wordle?
I do the Wordle. Yeah, I do the Wordle. I do the crossword. I do the spelling bee. Those are the 3 main ones. But you got to get up to the American Crossword Puzzle Tournament at some point.
Oh yeah, I love crossword puzzles too, and Sudoku. Sudoku's another.
Sudoku's good. Yeah.
Yeah, that's good. Now for the question I ask every guest on my podcast. For kids in high school and college looking to enter the world of finance, what advice would you have for them?
Sure. So first is probably most obvious: work hard at whatever you do. If you find yourself not working hard at what you do, it probably means that you don't love it enough to be sort of pursuing it as a career. So certainly work hard, devote yourself. Ask a lot of questions. One of the things that I think is a missed opportunity for a lot of the junior people or people just starting their career that I work with is they're wallflowers. They sit, they listen, they feel like they don't have the right, quote unquote, yet to ask questions and jump in. And I think I see a lot of confidence in people starting out their career that are jumping in, not afraid to ask questions. Not that they're not doing their research, right? That are showing that they're actually doing research and eager to learn more by asking questions. And even more importantly, have a perspective. Some of the best ideas, especially if you're in a dynamic company, dynamic business, whatever it is, asset management or whatever, the best ideas, the new ideas, a lot of times come from people that have started their careers, they've been learning, they're sort of seeing how things work on the ground, but they still have sort of a fresh perspective on how an industry, a business initiative, what have you, could function. And if we're not sourcing ideas from the early career people who have that perspective, then we're missing out. We're not going to have a dynamic business. And so if you're somebody who's sort of starting out, jump in, have a perspective, share it, ask questions, and you should know more about the specific thing that you're working on than anybody else. Take risks. So what I said before, be flexible. Careers are very long and winding things. I could tell you as somebody who's sort of about 20 years into mine and feel like I have a long time to go. Things unfold in ways that you can predict and can't predict. So be flexible, be willing to take risks. And most importantly, like I said, enjoy the journey. Whatever it is you do, if you're not getting out of bed every morning, or most mornings at least, feeling excited, feeling intellectually challenged, feeling like you're enjoying the people that you're working with, that it's worth all the time that you're spending. Maybe you have a commute, maybe you're on the subway, you're certainly spending a lot of hours. If you're not enjoying the journey professionally, you're probably doing the wrong thing. And that's more of a gut feel than anything else. And that'll change in your career. But enjoy the ride. And when you're not, think about why that is and what you might need to do differently to get on a different track to make sure that you're getting that fulfillment.
Thank you so much for that advice. And thank you so much for a very interesting and informative conversation.
Appreciate it. Thanks so much.